Thanks, Stephen, and sorry for those of you that joined yesterday because I'm going to do my same three slides again and you'll have to listen to my introduction again. But for those of you who don't know me, I'm Rachel. I'm the Talent Development Associate here at Federated Hermes. So I look at a variety of different things, but today, obviously, we're looking at our early careers programs and some of the opportunities that we've got going on in sustainable fixed income and our US mid team. So I'm going to share my screen. So you've got our slides. So just a bit of background, Federated Hermes. So we are global leaders in active responsible investment with the purpose of creating long-term wealth. So that's our mission. We are active in public and private markets. And just a bit of history for that, we were founded in 1983 to manage the pension funds for BT Pension Scheme and the Post Office. So if you look us up, you might see references to BTPS. That's where that's come from. We became Hermes Pension Management in 1998. I'm just looking at my notes to make sure I've got the right date. And then in 2020, we changed to Federated Hermes as we were acquired by our parent company in the US, Federated Incorporated. So you might see some references to Hermes if you go away and do your research. We used to be referred to as Hermes. We are now Federated Hermes. So just as a starting point. My next slide is just a video, a much nicer summary from our CEO, Saka. So I'm just hoping the speakers will work for you. So if everyone could give me a little nod or a thumbs up if you're able to hear that, that would be brilliant.
Rachel, I'm not sure if the sound is shared. Maybe
Okay, let's try again. I said that was our CEO talking. I think I'm thinking of a different video, but that's a good plug for you to go check out our website because there's a nice summary from Saka as well. But hopefully that gives you a good idea of some of the figures that I included on the previous slide. Just to summarize some of that because it's chucking employee numbers out. So to give you an idea of where we're located, for those of you interested in the internship, or if you're not, you're just interested in the company, Federated Hermes Limited, we're based in London. So we have about 500 colleagues here in the UK, and we have offices all over the globe. So we've got in Singapore, New York, Pittsburgh. We've got one recently in Australia. We're opening a new office up in Italy, all these different changes going on. So quite an exciting place to work if you want to be around lots of diverse people. Our Federated Incorporated parent company, that they are based in the US, so their base is in Pittsburgh, and they are the group that top our numbers right up to that 1,000 mark. So that's where that figure comes from as well. So to give an overview of the program, oh no, next one. That's what I wanted. Do want to play that one again. So the 10-week program itself, this is just a summary of some of the things that you'll be doing. So I won't share too much detail because Sophie, Mark and Luke are going to be going over the specific details of what you'll be doing within the roles. But for the whole 10-week period, that will be in July, and you'll be working on a group project throughout, and then have the opportunity to present that at the end to a group of senior leaders. Once you are a successful candidate, you become part of our student ambassador program. So as this is our first year running our formal summer internship, you'll be our first of our alumni, which means you'll be invited back to future events and opportunities. We'll be hosting lots of lunch and learns. So this is an opportunity for you to learn from area professionals. So that might be from our responsibility office, our real estate teams, just to give you a flavor. And then we have a corporate social responsibility offsite day, and that is just an opportunity for you to get away from the office, to work with our charity of the year, which is Shelter, and to do something team working with your line managers, and maybe some other colleagues that want to get involved as well. Every year we have a company summer social, so you'll be invited to that too, as well as training days with CFA training providers and opportunity to get involved with employee network groups. So that's just a flavour of some of the things and opportunities that you can get involved with. As a reminder, this role is based in London, and we are right next to St Paul's. You can't see because I've got lovely scaffolding behind, but our office is smack bang next to St Paul's, which is obviously a fantastic location as well. I'm going to pass on to Sophie, who's just going to share a bit more about sustainable fixed income.
Yeah, thank you, Rachel. So I'm Sophie. I've been sitting within the sustainable fixed income team for about 1.5 years now. I joined in September 2021 after I finished university. I studied philosophy, politics, and economics at Durham University and started at Hermes as an intern actually as well. So I'm very excited to be speaking with you all today. So I'm going to give a bit of background about the Sustainable Fixed Income, or SFI team as we refer to it. So we sit obviously within the fixed income team here at Hermes, which on a global level manages about 100 billion worth of assets. On the London side, we mainly offer flexible credit and high yield strategies, and these are all managed by a team of portfolio managers together. So we're a single fixed income platform that manages a myriad of funds together. So to manage these funds, there are a series of different inputs that we use, and I've added this kind of diagram on the right to demonstrate that. So across our strategies, we will use a different extent of the blue and green sides of this chart. So every single strategy that we have is going to leverage those blue parts, which are inputs that are generated by the credit and the investment team. So we have the credit score, the value score, and the ESG score. For all of our funds, those inputs are going to be used, but then we also have a series of sustainable and impact funds, which make up about almost 50% of the funds that we offer. And those funds will use the green parts of the diagram, which the SFI team is responsible for. So we work very closely with the fixed income team. We are deeply embedded into the team to be able to offer these products to our clients. And so similarly to the work of an investment analyst who generates this credit score, this value score, this ESG score, we are coming up with these sustainability scores that are then fed directly into the investment process. So I'm going to go into those into a bit more detail, but before I do that, I wanted to mention the ESG score, which you'll notice is on the investment team side. So when we think about the ESG score, we're thinking about an inward-looking score. We're looking at an inward-looking assessment of a company. And when I say that, I mean an assessment of how environmental, social, and governance factors will influence a company's enterprise value and financial performance in the short term. So that's why it's an inward-looking score, because we're looking at the impact on the company itself. When we move over to the green side of things, we're looking at impact on external stakeholders. So what impact is this company having on society, customers, employees, communities, and the environment, because the environment is also a key stakeholder. And we're coming up with our hypotheses on a company by company basis using these processes. So to give you an example, we have our climate change high yield fund, which uses our climate change impact score, which is a proprietary assessment that we have come up with on our team that assesses the extent to which we believe a company is going to deliver on a 1.5 degree aligned decarbonization strategy. So we look at a single company, we look at their ambitions. So do they have 1.5 degree aligned emissions reduction targets? What are the strengths of those targets? And to what extent do we see evidence that a company is going to deliver on those targets? The outcome of all of these scores that you see in this circle diagram is a 1 to 5 score, 1 being the best and something that we can invest in the most heavily in these funds, that we can add more of a weighting on. 5 being uninvestable. So in the case of the climate change impact score, 5 means a company is completely indifferent to decarbonization, and therefore it is not a good fit for our climate change high yield strategy. Another very key input that we use in our team is engagement. So you'll see in our beautiful little diagram of our team below that we have about 3.5 engagers. I say half because my colleague Bertie works 50% on engagement and then 50% on the sustainability integration side with me. But Aaron, Jake, Sarah, and Bertie, they work on engaging with our portfolio companies. So they will meet with companies that we invest in. They will communicate our expectations on what we want the company to be achieving. They will set objectives based on those expectations that follow defined timelines by when we want the company to achieve these things. And this lets us do 2 things. This lets us get a much deeper sense of a company's future performance on the sustainability side, but it also allows us to actually create this impact that we're aiming for and influence change and influence management to make change on the sustainability side. So we have our SDG engagement high yield fund, which is a 100% engagement mandate. That means that we have to engage with 100% of the companies in that fund on an annual basis. So that is what our engagers are spending most of their time doing. And that is one of our key strategies that we are working on. We also benefit from EOS, our stewardship team. We are one of EOS's clients, but we benefit from them being in-house and being able to catch up with them on a regular basis on the companies that they are engaging for us, because we don't have capacity to cover all of the names in our portfolio. So we also benefit from the use of EOS as well. And that is a really great benefit that we have as well. So if we can move to the next slide, if possible. So just going over day in the life. So I'll go what my day in the life typically looks like. To give a bit of background on my exact role, I'm an ESG and engagement associate. So I spend half of my time on ESG integration and sustainability scoring, research, that kind of thing. And 50% of my time helping our engagers prepare for their engagements. Because we need to make sure that we are using this time that we meet with the company wisely. We want to make sure that we're advancing our objectives, that we're focusing on the right topics, and that we come prepared. So I'm helping them prepare for those meetings. So day in the life, I'll be researching the sustainability strategies of specific companies that we hold in our funds, and I'll be assigning or updating our sustainability scores based on that analysis. I'll be communicating the outcome of that analysis, so the scores and my hypotheses as to why that score is what it is, to the credit team. So that might be via email in some cases, that might be via investment committees like our credit committee, where we do a deep dive on one single name on the financial side. And also on the sustainability side, we get our chance to speak as well, which is great. Then also, as I said, helping engagers prepare for their meetings. So that's more in-depth analysis on a company by company basis. I get to attend those engagements as well, which is great. I get a lot of face-to-face time with actual companies that we invest in. A lot of collaboration with the investment team and EOS, as I've mentioned. We're also very excited because we've just hired 2 new people on our team on the Pittsburgh side, as they are working more on ESG integration and sustainable investment and getting those processes in place. So we've been working a lot with the Pittsburgh team, which has been very exciting. We write our own reporting materials and case studies for our clients, so communicating what we do and what we've achieved. But we also want to constantly be staying on top of what we're doing and constantly improving. So one very exciting project that we would love our intern to be able to work on this summer is integrating biodiversity considerations into our CCI scoring process, because of how deeply interwoven these 2 topics are, climate and biodiversity, obviously. So that is an exciting research project that we would love to get some help on, and that hopefully you would be working on in this role. What it takes to succeed, I would say passion in sustainability, but also an awareness and a belief that the private sector needs to be shifted towards positive impact rather than negative impact, as it has been associated with in the past. So a conviction in this kind of philosophy, if that makes sense, and a passion in that philosophy. An analytical mind, an ability to communicate the results of this analysis in a clear and concise way, and an ability to defend your analysis as well and back up the claims that you're making. That's very important as well, because sometimes people might not agree or might have questions, and you need to be able to back those up. And then also time management, because I've talked a lot about a lot of different priorities that you can have on this team, and you need to be able to prioritize between those different ongoing projects and be able to manage your time well. So yeah, that's it from me. Happy to take any questions. I see some popping up in the chat. I don't know how we want to.
Yeah, don't worry. I got you,
Okay.
Sophie. Thank you so much for the comprehensive overview and breakdown. Someone asked quite a very good question. Thank you, Dilip. ESG scores typically don't have standardized ratings across the industry. So what prominent features does the team look for as part of your investment philosophy whenever you are considering ESG within your portfolio companies?
That's a great question. So I would say it's first really important to emphasize that this analysis is our own. We are not going and stealing MSCI or Sustainalytics as ESG scores and relying on those. We're not relying on third-party analysis. We are doing that analysis ourselves, and we are, what our clients really value is the time and the energy and the human input that goes into our analysis of companies on a company by company level. So that's really important. In terms of what we look for, I think it depends on what strategy we're talking about. On the climate side, we obviously, on the climate change high yield side, we're looking at decarbonization. So a lot of it is not only looking at the stated ambitions of a company, so that might be targets that they've set, stated ambitions, but we also look at the evidence that they are delivering on these. So some of the things that includes is investment plans. So are they telling us how much they're going to invest in achieving decarbonization of their operations? What initiatives are they prioritizing? How detailed how detailed information are they giving us about that roadmap to decarbonization? I think a lot of companies nowadays are making big claims about sustainability and saying they're the most impactful companies in the world, but we want to see the proof in the pudding. We want to see how they're going to achieve this. We want to see money being put down to achieve that, some solid investment. And I think that's true also on the SDG side, where we look at more topics than just climate. We're looking at how is a company going to deliver on the UN Sustainable Development Goals. So I hope that answered your question, but let me know if not.
No, most definitely did. The next question we have here is just trying to read it from Will. Will Bristow, how do you handle greenwashing, for example, with some carbon offset projects?
That's a very good question. I think anything to do with offsetting, especially, we look at very skeptically. We want companies to first focus on decarbonizing and mitigating their own activities and reducing the negative footprint of their own activities first and foremost. Nowadays, there's a lot of kind of knowledge about what it takes to decarbonize, and I keep talking about decarbonize because I focus a lot on CCI scores, but we go beyond just climate as well. But there's a lot of information out there on what companies can achieve, and a lot of companies are setting that bar. And so there are fewer and fewer excuses for companies saying, you know, we can't achieve this. This is impossible for us. They need to kind of start working on this, start giving us the data, start putting strategies in place. So the bar is getting higher and higher. In terms of how to get over greenwashing claims, as I spoke about before, it's really how much detail are they giving us? How clearly can we see what the next 5 years are going to look like? Because companies that are making statements but don't actually believe in what they're doing, that's going to be very clear because they won't be able to give us that detail. We also get a lot of a sense of this from engagement as well. Engagement is a huge tool that we use to determine how genuine a company is being in the statements that it's making.
Got you. Another question from Terry. Terry was the one with his camera on, by the way, at the start. Are there any emerging trends in sustainable fixed income investing that you're keeping tabs on at the moment? So I guess something that's keeping you up at night.
Something that's keeping me up at night. That's a very good question. I think, you know, historically, the focus has been a lot on climate in the whole ESG space, to be honest, in the sustainability space, but people are starting to shift beyond that and starting to realize that there are some other very material issues that we need to be looking into. I mentioned biodiversity. We're very interested in developing on that side, and this space is evolving very quickly with the TFND and emerging frameworks that are helping investors and helping investors evaluate kind of their own impacts on biodiversity, helping companies evaluate those impacts and dependencies. So that's a really quickly evolving space. I'm also very interested on the social side, and how to, you know, measuring impact on that side is a lot more difficult, and but solutions are emerging on that side as well. So I think going beyond climate is an emerging theme within the space that I'm also very interested in, and we are very interested in as a team as well.
Got you. Thank you for that. Another question, just skimming through them, sorry. One from Grace. What has been the effect of SFDR and other regulation on the work that you do? Has it been largely helpful, or does the thematic focus of the industry on ESG ever cause friction with the value add for your team's scoring process? So, you know, SFDR being a very ambiguous regulation at the start when it came about, how's that kind of influenced the work that you're doing in your team?
Very, very good question. It has taken a lot of my time recently, funnily enough. But yeah, I mean, listen, I think the purpose of the regulation is great. We want to avoid greenwashing. We want to avoid people making claims that they can't back up. We want to be able to evidence impact and the impact that we are making. I think investors struggle with adhering to the exact requirements and putting everything in the language of SFDR. Like they might have the data available to them. If they do, some asset managers don't, and data is a very difficult area in ESG, as I'm sure you all know. But putting it into the language that the regulation wants you to communicate it in is definitely a challenge. And also the fact that this regulation came before the regulation requiring companies to report on ESG and to report on the specific KPIs that we need to use for that analysis. The cart kind of came before the horse. So that is a challenge that we've been experiencing as an industry. So basically, my answer is I believe in the purpose of the regulation, and I think it's an important step forward. But implementation has been a struggle across the industry for sure, and it's a struggle where we all have to overcome. So it does take a lot of my time, but I think it is time well spent.
Got you. And I think this one's just a final question from my side. Obviously, you mentioned that you started as an intern and working in the sustainable, ESG space. It's a space that is evolving. How do you kind of keep up to date and, be able to comprehensively talk about this as you've done today? How do you keep up to date with the industry and just like learn all this complicated regulations that are coming into play and how the industry is evolving as a whole?
I think the easy answer is because I have to, because it's what I do every day. It's, I learn from my colleagues all the time. I've got very experienced colleagues on the team that I learn from on a daily basis. My individual company research that I do informs me on these topics on a day-to-day basis. It's just basically my day job. I'm learning about topics that I'm extremely interested in because I'm passionate about sustainability just by what I'm doing on a day-to-day basis. And I always say to people that working here, this sounds like Rachel's like got a gun to my head, like telling me to say this, but like I feel like I've done a whole other degree since starting at Hermes, because I've learned so much from just learning on the job. So that's definitely a benefit from it. And then, just staying up to date with the news and sustainability is increasingly in the news as well. So keeping up on the most relevant topics there is key to my work. So yeah, hope that helps.
Got you. Thank you for that. I think we'll move on to the US mid and fixed income team, and then we'll come back to other questions at the end. So Rachel, happy for you to progress.
Sure. Well, thank you, Stephen. Thank you, Sophie. I thought that was fascinating. If it was possible, I'd be applying for the internship on your team myself. So so thank you for that. Look, everyone, very nice to meet you. My name's Mark Sherlock, and I'm involved in the US SMID team with my colleague Lukeman, who's also on the line. Thank you for your interest in what we do in Federated Hermes in the finance profession. Single, most important piece of advice is just, please go for it, please apply, and please keep interested. There's a career in finance for everyone, and if you're interested in it, follow that passion. In terms of the structure of this, as I hope you know, the first part of this 10-week internship would be on Sophie's team. The second would be on the team that I work with, which is US SMID Equities. Now, SMID, other than being a rather unattractive word, stands for small and mid-cap equities. So if you think about, you may have heard of the S&P 500, and I'm sure you'll have heard of some of the big companies, US-listed companies, such as the Apples and the Googles and so on of this world. That's not what we look at. We look at a bunch of companies below that market index, the small and mid-cap market, which to put it in context is companies with a market capitalization of around $1 billion through to sort of $15 billion, something like that. In terms of companies you may have heard of in that space, I guess we have certainly historically had investments or an investment in WD-40, so that little yellow and blue can of oil that you have for your bike or motorbike or fixing squeaky hinges in the garage or wherever. That's a company that we've owned in the past, all the way through to some of the more fashion-led names. So I guess the Abercrombie and Fitches, the Lululemons, the Polo Ralph Laurens, that sort of company. So while they are SMID, they are still in many cases household names. The slide here simply shows who you'd be working with for the 5 weeks that you're with us. We, as with Sophie's team, integrate ESG, so we can talk about that from an equity perspective to the extent that it's of interest. And you can see, obviously, Lukeman and I are here on the call to answer any questions you may have. So if we could pop to the next slide, please. Who's that guy during the pandemic? I feel like him. Next slide, please. So overview, this is what we're trying to do. The fund that you'll be working on, I've just tried to put, while this is quite a dry slide, I'm just trying to show the type of investment that we make. Really, it's summed up in terms of the criteria we look for on the bottom left there. We're bottom up, which means we're looking at individual companies rather than trying to pick out trends in the market or be momentum driven, for example. We're looking at individual companies, and really what we're looking for is high quality businesses, which we define as those with a sustainable competitive advantage. So really what we mean by that is, what does a company do different to other companies, and how durable is that? I quite liked, many of you might have heard the recent Warren Buffett quote about how you sum up a good company. And he put it in quite a good terms, which was, if someone paid you 10,000 or 1,000 or 10,000, whatever the number is, dollars to not buy another Apple product, again, most people would say no to that. If the same question was posed, if you were offered $10,000 not to buy a Ford, you'd probably take it because you go around the corner and buy a Vauxhall or something else. So, you know, in terms of how you characterize a good company, one that people whose products people rate, that's perhaps a lens through which to look at it. We're longer term in nature and lower risk. Excuse me, in our approach relative to the index. I don't want to get too technical, but we are, in simple terms, I suppose, you know, we quite like dull companies, and dull companies don't make dull investments. And we are firmly a believer that ultimately the tortoise kind of beats the hare. We've been doing this for 15 years plus and delivered good returns. So as I say, we kind of try and mix the financial and the ESG elements in investment. What we're really looking for is sustainable companies, companies that if you went away for 5 years, went to a desert island for 5 years, you came back, looked at your investment, A, would still be there, B, that company is bigger, more profitable, and your investment in it has grown. If we buy those types of businesses, and ESG is an important element of that, we will be delivering our objective, which is, you know, building sustainable wealth for our investors. Next slide, please. Loving saying that. So, well, we talked about some of the companies that you may have heard of, you know, in terms of the WD-40s and Abercrombie and Fitches of this world. Actually, what the portfolio is broadly made up of is companies which I hope you haven't ever heard of. I thought I'd share one. This is a stock, it's the stock that we've owned for the longest in the portfolio. In fact, we've owned it for over 20 years in various sizes. And we love it because it's what we would call a sort of under the radar quality compounder. It just does its thing, ticks up, and it's delivered, I think last time I checked, 11% return for 20 years, which means that if you put $1 in January 1998, that would be worth $8 now. And it's done that relatively low risk. So just to briefly take you through it, bear with me because it sounds pretty dull. It's a closures business. So if you look at the pictures on the bottom, on the right there, you look at the ketchup bottle, and you may have seen when you go and buy a ketchup bottle, you know, they are now designed so they're called gravity-fed dispensing mechanisms. So they've got where the product comes out is at the bottom of the bottle, not the top. Now that is actually an Aptar patented product called Simply Squeeze, which means you can get the ketchup out without it getting all messy around the rim. That's an example of what they do. They also do miniature pumps for aftershaves and perfumes. And their sort of the crown jewels, if you like, of the company is that they make the inhalers that you use for asthma. Now, it doesn't sound very complicated. It seems like a plastic tube, but because it's a drug, effectively, they've got to have very high levels of accuracy, very high levels of repeatability. So every time you push the asthma inhaler, exactly the right amount of drug comes out. So it's an example. I think it's a company that you will probably never have heard of, but as we joke, if you are a French fry eating, perfume wearing asthmatic, you use 3 of their products every day without even realizing it. So perfect example of the type of thing that we're looking for. In terms of the day-to-day, I'm going to hand over to Lukeman. We were lucky enough to have him join the team last year, and he can share his lived experience, as it were, over the last few months, and then very happy to take any questions you may have. So Lukeman, over to you.
Thank you, Mark, and thanks everyone for listening in, and also Stephen for putting this together. So I've been working in the industry for just under 3 years now, and I've just actually completed my CFA level 3, which is quite qualification that's quite highly regarded in the industry, and I've been working at Federated Hermes for almost a year now. I'm basically Mark's little soldier. I take orders and I deliver. And but jokes aside, the role of an equity research analyst is essentially, as you can see on the...
Probably more, sorry to interrupt, it's probably more ninja than soldier. I just put it out.
yeah.
Good.
I'll be whatever you want me to be, Mark. And so on the right hand side, you have what the kind of what I like to say is the process, right? And Mark showed you the sort of graph about what returns we deliver and how we try to deliver returns above the benchmark. But investing is very much a process-driven game, let's say. And so every day when I come in, it's not just sort of here you go and sort of do the research and then present it and then that's it. It's quite a iterative process of constantly learning and constantly understanding how to invest in the financial markets, how to be a better investor from a behavioral psychology perspective, and also learning about different businesses and how do you differentiate between a good business and a bad business, and really isolating the factors that we as a team like to look for when we're understanding the competitive advantage and the moats and that sort of thing. So it starts off with just doing the research, taking the information, doing the analysis, and this is sort of where the sort of learning about having the domain knowledge is quite useful, right? And that stuff you can read. There's lots of books around it, and there's lots of material even online. You don't have to do the CFA, but there's a lot of stuff you can learn about how to do the research analysis, and that includes understanding basics of accounting, corporate finance, economics, and some basic business concepts, right? Things that a lot of us will be familiar with, like profits and growth and investing into the business and that sort of thing, and thinking about the industry, whether it's attractive, how competitive it is, right? And every day it's all about improving that process. And then you have to have good communication skills, as Sophie sort of mentioned. It's all about now you've done the work, can you actually present it and communicate it in such a way to convince your teammates that this is a good investment, right? And then you take a decision, right? That all the process of researching and analysis and discussing needs to lead to a decision. And a decision doesn't mean necessarily that we have to invest. A decision can also mean that we don't invest, because avoiding bad investments can be just as good as making good ones. And finally, you have the portfolio management piece, where as you can see, we've owned Aptar in the company for almost the whole time I've been in this world. So it's really constantly being actively understanding the business better and having that relationship with the management of the company, because the industry changes, the world changes, and we always have to be nimble and adaptive and learning about the world. And so it's never a constant thing, it's always a process. And if you sort of enjoy that whole aspect of continuously improving yourself and learning about the world, and being an analyst is definitely sort of an attractive place to be in your early careers. What it takes to succeed, a lot of stuff that Sophie's already mentioned, right? I've talked about the domain knowledge, so that's stuff you can learn on the CFA by reading books, and that's finance, accounting, etc. But having a passion and interest is really important, right? And I think the reason that's quite important is because this is a very competitive landscape. Beating the market is difficult. There are a lot of very smart people trying to do that, and they've been doing it for many, many years. Mark's been in the industry for many, many years. There's a lot of experience that you need to gain over time, and having that passion and interest can really help you, have that drive and really, push yourself to kind of beat the market and compete and have that edge, basically, right? And I've already talked about communication, but also patience. Investing, as I said, experience is extremely important. It takes many, many years for you even to know whether or not you're actually a good investor. And always, again, the process of improving yourself takes a lot of time, and it's always, as we say, better to get rich slowly than quickly, and the hare beats the turtle, or the other way around. The turtle beats the hare. So that's basically a day in the life. I'll pause there, and then we can answer some of your questions. Thanks guys for listening.
Thank you so much, Mark and Lukeman. I was gonna ask Mark, if Lukeman is the ninja, then what does that make you? Are you like the ninja master? Is that what we would?
Best not to ask. Best not to ask. The old ninja that can't move as quickly. I think that's probably what Lukeman would say.
Got you. Okay, a few questions have kind of come through. I'm just gonna scroll to the top. So someone said, do we need specific technical knowledge for the interview? And if so, how to prepare / what exactly to look at? So I guess that's just more deeper into what the interview process would look like.
Sure. Well, happy to take that unless Rachel you want to, but certainly I think and Sophie will have a view too, but from my point of view, no, you don't need technical knowledge. There's no expectation of that. I think curiosity, common sense, an inquisitive mind, a thoughtful presentation is all that we're after. That, as Lukeman says, you can, to the extent it becomes relevant, you can learn the technical stuff later if you haven't learned it already. I didn't do a finance-based degree, and I did, in fact, accountancy and then CFA. So you can definitely learn in that sort of on the job, as it were. So long answer, no, you don't. Passion, interest is what I'm most interested in. Sophie, I don't know.
Yeah, no, I definitely agree with that. When I joined, I had no kind of financial background. I didn't really do finance courses at uni, and to be honest, what the credit analysts were talking about sounded like gibberish most of the time to me. But since being here, I've learned on the job. It now makes more sense to me. I'm now learning as I go, but by no means do I have to have the depth of knowledge and understanding that they have when they're doing their credit analysis on the financial side. So it's definitely not a requirement, just passion and interest, as Mark said, for sure.
Got you. And on that topic of degrees, would it be fair to say that it's quite degree agnostic? Because someone kind of mentioned here, can I apply even if I'm studying medicine? And I think some people kind of viewed it as a silly question, but wanted to kind of confirm if in fact it is appropriate to apply even with that kind of degree.
I would say definitely. I mean, there is a chunk of the index that is healthcare, and if you had a medical background, there may very well be light you can shed on specific areas of growth within medicine, emerging trends, and even if that isn't the case, if you're studying medicine, you've clearly got a brain, and we like people with brains.
Got you. Sorry, do you have anything to add to that, Sophie?
No, just said same here. Sustainability touches every aspect, every sector, every kind of field. So no specific requirement for degree.
Noted. One for Lukeman, and apparently you have to answer this as honestly as possible. How many hours do you work on average?
Yeah, sure. It's about almost, I'd say, a week. So that's about, let's say, 80, 100 hours a week. Now, Mark, you can close your ears now and I can tell you guys the real number. So it's about 8 hours a day. I'm sort of in by around 8 and then head off about 6, 5:30, that sort of thing. So about 40, nothing too crazy. I think what I've sort of really appreciated about the specific role that that I'm in and the way that we invest is it's more about the quality of the work that you provide. And that might mean, and for me personally, after having done a fair amount of research in a day, you know, just reading through transcripts and a lot of information, I find it quite helpful just to even go outside and just process that information, you know, and that works for me. So.
Got you. And I guess if you could kind of maybe talk about the realities of studying whilst you were working as well, because, you know, to pass 3 levels of the CFA within the time frame that you've done it under as well, you must have had to put some hours in after. And I think that's important to really kind of highlight to people that you do have to sacrifice some of your time to kind of, you know, study outside of work if you want to get a qualification like that, right?
Yeah, I mean, on the sort of domain knowledge and CFA stuff, you know, it's sort of, you know, you can learn it over you know, over time, and it's not sort of a compulsory, it's not a completely necessary. I did enjoy the stuff that I learned in CFA. I didn't enjoy the sort of examination aspect, but, you know, a lot of the information that's in it, you know, I find very useful for the day-to-day, and being able to work at the same time actually helps you solidify that knowledge and really apply it, right? Because investment is a sort of, I mean, yes, you have the academic and the theory and stuff, but, you know, it's very, you know, about application. But for me, you know, it's all about, again, the consistency and the sustainability of how you do. I'm not a crammer, so, you know, it's just a steady 2-3 hours a day, you know, 1 hour in the morning, 2 in the evening, you know, just, you know, go at it nice and steadily. Don't sort of rush it, just take your time, and that way you'll probably enjoy it, or at least, you know, you might suffer less, you know, because you know, it's not because of the sheer content, the sheer volume of the content, you know, it's not something you'd want to cram, and, you know, you don't want to go into an examination stressed because you feel like you don't sort of know your stuff. So.
No, thank you for that. Mark, would you be able to kind of talk through some of the sources of where you get your information to be kept up with the industry, if that's all right?
Sure. So I think the key element to success, which is not the question you've asked, but it is allied, is curiosity in this profession. Curiosity, and I would also say resilience, because there will be periods when, you know, you will look very stupid because you don't get everything right, and if you did, then, you know, you wouldn't be still working. So I would say curiosity is important, and you can that can be fed through a number of different sources. Of course, if you work in financial services, Bloomberg would be a very significant source of information. Equally, you know, we are on as what we would call the buy side, which is the asset managers. We are served by the sell side, who are the brokers who act as an intermediary between the companies and the representatives of the asset owners, i.e. us. So we get a lot of information through them. Equally, though, you know, there's one would try to get some sort of less conventional sources of information, be that comparative data from competitors, be that industry studies, be that, you know, your broader reading. I'm sure, you know, you guys all spend a decent amount of time on the internet. You know, there's a lot of misinformation out there, but there's a lot of good information out there too. And also just keeping an eye out, like, you know, at a most basic level, like, are you spending more at the moment? Are you spending less? What are you spending your money on? Are you spending it on things? Are you spending it on experiences? You're not spending it at all. You know, it's highly likely that what you're feeling, a lot of other people are feeling too. And that can, you know, often be an early indicator as to perhaps what the health of the economy going forward is. So multitude of inputs, I'd say.
Got you. No, thank you for that. I'm conscious that I had a few people raising their hands earlier, and we have a few confident people today who would like to ask some questions. So I'd hand it over to Grace, if you could ask your question.
Hi, yeah. Oh, yeah. Hi, everyone. I'm Grace. Nice to meet you all. Really good, informative speeches from everyone. So that's been really helpful. This question is probably more for Lukeman and Sophie. So as Mark has kind of explained, and Lukeman has kind of explained, the progress and the success of the work that you guys are doing and we're doing it looks like it can be measured on longer time horizons. So we spoke about getting lost in the wilderness for 5 years and stuff like that. For more junior members of the team, how does that impact, let's say, your own self-reflection or feedback processes within the team as well, on how well you are doing in those earlier stages? So if we put in the context of an internship, if we do feel like we're doing some impactful work on the product side, how do we kind of see it before the 2.5 years mark? How do we have that sort of dialogue, if that makes sense.
That's a good one. Not sure how to answer it.
Yeah,
Go for it. You go first.
so yeah, it's a very good question. So I guess if I understood it correctly, are you sort of asking Grace, what the kind of feedback is like, and what that
yeah what are the indicators of success when in general the business works via success on longer time horizons?
Yeah, I mean, I think, I guess I can speak from a personal development perspective, right? It's just about having those regular check-ins, because long-term success will have checkpoints, right? So to say, are you on the sort of right path? Are you making those incremental improvements every day? And I guess also it depends on, what it is that you're measuring, right? And so, for someone at my level, I'll have certain ideas about, where I think I'd like to be at a certain point in time, and my manager Mark will have, give me that help. And I guess also my other teammates and, people around the business who, at least are a lot more senior than me, and also who are only a few years more senior than me, and having those, conversations and just, interacting with other people and getting their viewpoints, that helps you sort of, I guess, guide and let you know whether you're on the, if you're sort of heading in the direction that you'd like to be. I don't know if that answered your question.
Yeah, that was really good. It sounds like you kind of lean on the expertise and knowledge of those around you and those more senior to you. So that sounds like a good environment. I think a bit more on that question and a bit more on like development as well. In terms of the CFA, what made you specifically choose the CFA? I know a lot of investment management professionals do tend to do the IMC and other sort of certifications. So do you feel like the CFA is more relevant than the IMC for working in the investment management or asset management, like industry context?
Yeah, I'll sure just give a couple of minutes on that, and then Sophie, happy for you to chime in. So I did economics and politics at university, and when I was at my old company called Schroders, as part of the graduate program, they made you have to do the IMC first as a starting point, and then if you were sort of on a specific an analyst role, they sort of would make you do all three levels of the CFA, essentially. So it's up to the firm, it's up to you as well, and so just have a conversation, because I know some people who didn't want to do it, and they pushed back against doing it. But what made me do it? Yeah, I was basically told to do it, and then I did it. But I'm glad I did do it. So, and now it's all done, and now I'm all done. Sophie?
Yeah, I mean, to answer your first question, Grace, I think I agree with Lukman that honestly, I lean on my team to provide regular feedback, which they do. I mean, we're a very friendly, very open team, and I feel, very comfortable going to my managers and going to my boss and asking for feedback, and they provide that as well without me asking for it sometimes, but that's great because it helps you develop. So I think definitely get a lot of that from the team. And then in terms of accreditation, I haven't done the CFA. It's probably a bit too applied on the financial side for what I do, but the CFA is coming out with, or has come out with some ESG specific courses and climate specific courses that I'm considering. I recently also did an online 8-week short course with the University of Cambridge. They're offering some sustainability specific courses. I did the one on sustainable finance, which was great. So there are loads of opportunities for further education out there. Then the sustainability space is always evolving. So yeah.
Thank you so much for that, Lukman and Sophie. Unfortunately, guys, we are literally on the hour. So what I would ask people to do is that if you have any burning questions, if you send them over their email, and I'll make sure I get them answered for you guys and put them in this week's newsletter as well, so you can be informed for the job applications. As you know, the applications are live at the moment. And for those asking for emails, you're going to receive one literally shortly after, with feedback on this session and also a recording of this webinar as well. As I mentioned, the applications are live on our website now, so get applying ASAP. Hopefully you've got a lot of insight into some of these roles and what they look like as well. And can I just say thank you to Sophie, Lukeman, and Master Ninja, and of course, Rachel as well for putting this session on. We really, really do appreciate it. What I would ask of you guys as well is that if you can just share this on socials, on LinkedIn, talk about your experience of this as well, and just raise the profile of this as well, that'll be much appreciated. Rachel, I'm going to hand it over to you.
Thank you. And just picking up one thing, if you are applying, one question we had a lot yesterday was, what do you need to do to stand out? I know people have talked about passion a lot and interest and expressing that, which is fantastic. But one thing just from a recruitment side, please make sure you outline how you're applying that interest. It's all very well saying, I love climate change and I'm really passionate about it, but applying it is what we'll be looking for as well. So thank you so much, Stephen. Thank you, Luke, Sophie, Mark. You've been awesome. So thank you.
Perfect. Thank you, guys. Have a good evening.
Thank you. Yeah.
Thanks.
Right.
Thanks.
Have a good one, guys. Bye.
Thank you.